Okay guys, so I had to scrounge quickly to get this video made and up onto YouTube, but at this point, it's got to be a bit of a joke, because today we're covering another buy now, pay later company. At this point, I mean, they should already just name the ASX the buy now, pay later market. I mean, I might as well change my own YouTube name to Levo buy now, pay later, because there's been so much buy now, pay later news, capital raising, money within the market. People are making hella money out there in the markets at the moment. So here today, I want to cover what's happened with Sezzle and why its shares have gone up 22%. And guys, I only heard about this news whilst I was out at dinner. So I rushed home, smashed a can of Red Bull, put some words together onto a notepad so I could get this video out for you guys. So if you could, please just smash the like button below this video. It'd be greatly appreciated. Helps out the channel massively, helps the YouTube algorithm also, YouTube algorithm also. And if you're new to this channel, please consider subscribing, because we talk about finance, we talk about stocks, a few other things as well. But otherwise guys, that's it. Let's get straight into the presentation about the capital raising. Now, obviously, to give a bit of context, I'm going to go through the business model, exactly how it works, the capital raising, and then head into a bit of the future prospects for this company to help you determine to see whether it's worth investing in or not. So Sezzle is a public company that was founded in 2016 in Minneapolis of the United States. So not an Australian company, and funnily enough, opened in Australia in the Oz market in late 2019. And you wonder why, right? I mean, I'm sure it wouldn't have to do anything with the buy now, pay later market already soaring and surging, with Afterpay taking the massive lead in that and kicking butt in that space. And so here's an American company that come over to Australia, open up in our market, and bada bing, bada boom, raise a couple $100 million. And right now they're actually nicely sitting at $714.39 million in terms of market cap, with the share price at about $8. So let's get into their business model. How does Sezzle actually work? Well, it's actually similar to Afterpay and Zip. A consumer will purchase the good and pay for it over 4 installments with no fees applicable, and if they are late for a payment, there's a fixed late fee. So there is no spiraling interest that they're going to take on as a consumer. Now, I'm not going to go into this business model any further, because at this point, well, we should all kind of know how buy now and pay later works. But what's interesting to note is that their merchants or their partnerships are just in North America, and in particular in the United States and in Canada. Yes, not in Australia, even though the company is listed on the ASX, or the buy now, pay later market. And so this is why you might also see a high demand for the stock, because it already gives exposure to the North American market and captures that demographic, which Zip and many other companies are trying to penetrate and get into. So why did Sezzle want the capital raise, and what does it need it for? Is it the fact that ain't nobody paying their money back, or is it that they're just looking to expand? So it's mentioned in their presentation that they're looking to raise 86 million Aussie dollars, or 60 million USD, with 80 million coming from the institutional placement. So a firm is looking to take on these shares from their end, and from retail investors, it's looking to raise $7.2 million. In looking at how it's going to use the funds, it looks like $27 million is going to the sales and marketing costs, which include additional business development and marketing personnel and other related marketing costs. Now, $14 million is going to go into product enhancement and expansion. The product enhancement and expansion costs include additional developers and software engineers for enhancements and development of the additional functionality and applications within the Sezzle platform and system integrations. You'll see this later on. There's other things apart from the buy now and pay later space that they're looking to integrate themselves into. Now, $11 million is going into international expansion opportunities. This is of course going overseas and going a little bit more into Canada, other testing grounds to see how their product is going to work and whether it's viable. And about $8 million to bolster its balance sheets. This of course goes into increasing their cash reserves and potentially the cost for debt facility refinancing. With that in mind, they have shown good growth in their second quarter results, with an increase in active merchants of 219.2% year on year. The active customers have also gone up to 1.4 million customers, which is an increase of 243%. And their collection of merchant fees has drastically increased by 397.1%, which is a staggering amount in terms of growth. Now let's look at who their typical customers are and how they've adjusted to the Rona. What's positive and interesting to note is that almost all their sales are made online through e-commerce platforms. And so of course, they are well positioned to take advantage of all the closures in shops. Their OG cohort, the ones that have applied a bit earlier when they first started, have also been transacting more frequently, which we'll touch on soon. And they've also seen a big increase in repeat customers, which is good as it shows that people are getting used to the service, and obviously it's good enough to use it again and again and again. Speaking of consumer demographics, it does seem like they have a younger audience, with Gen Z and millennials being within that space. Now, one thing I want to touch on is that we have to remember that millennials can age well into their 30s. So when people say millennials now, they're not in their early 20s anymore. We have to remember that. And the income levels should come at no surprise, given a lot of their users are young and might not have progressed as far in their careers. Also, most of the ones in the higher tax brackets of income really should just be using credit cards at this point for points, if you're responsible, that is, and debit cards because, well, you should already have the money for the things that you're buying. Now, what I do like about Sezzle though is that they try to create solutions for different forms of accepting payments and have gone into gift cards as well, which is like EML payments territory, and give customers discount gift cards similar to what we have in Australia with our retail gift cards. Which, if you haven't done so far and already buy stuff from the stores, like the retail stores regularly, then yeah, you should really hop on it. Also, there are affiliates for many of these stores, so it's another source of revenue, and it seems like they have further integrated their partnerships. And it's not just a matter of, hey, look, we can bring you customers, use our systems, bro. Okay, Mr. Lead Generator, sounds good. Being an affiliate incentivizes them to do really well because now they've got another source of income through the affiliate commissions and the merchant fees. Now, the last thing you really need to consider when we're talking about possibly investing into Sezzle is obviously the key risks that they have. And when you see this, and if you've seen my Afterpay video, I swear it's literally a copy and paste from the Afterpay presentation over to the Sezzle presentation. It's like, when you tell kids not to do it for their assessments, or when, you were at university and you got told not to do it for your assessments. Literally, I swear, they just copied and pasted from Wikipedia, in this case being the Afterpay presentation, and then slapped it right on their own. And you'll see, just in chronological order, it also looks very similar. Anyways, first one is obviously that they have to keep up with and comply with laws and regulations that have to do with facilitating debt and anything financially related. And we've seen this with Afterpay, who have gone through their fair share of legal battles, and this will only get more complicated if it looks to expand geographically overseas into different markets. Like, just imagine if they tried to actually expand into Australia. Like, how many buy now, pay laters do we actually have? Good luck with that, bruh. The second part, which somebody forgot to put a 2 in this presentation, is that there's a potential to lose key contracts and relationships. And yes, of course, their partners might not be seeing the conversions or leads it was promised and can cut off the ties due to the higher merchant fees of 6%. It could also fail to hit transaction volumes, which is an important metric because that determines the merchant fees that they'll be able to get. Although they of course want to increase this metric, it is a key risk, and if they don't meet it, it could mean that it would hurt their profitability and ultimately have an effect on the share price of the shareholders. Now, fourth is interesting because it's not so much that they use debt, like we know that already, but it's more so the fact that people are not paying back Sezzle for the repayments. And that's been a big expense that they've been taking on. Now, we know how much Americans love their debt. So this is an area for concern, and I don't know if they're going to start repaying as they go on or if there's going to be less repayments as we go on, so I'll leave that there. Fifth is new market entrants and competitors. And if you've been on this channel for quite some time, I'm sure you can list a few just off the top of your head. And to wrap this up, it's just gone on about, obviously it's dependent and reliant on some technology and communications stuff, which if there are issues with that, then there'll be issues that they'll be facing ultimately because then the users can't use the systems and service. But that's basically it. Sezzle's reached out and said, hello, Mr. Investor, thank you so much for your money. We're looking to expand, hopefully, and continue to see our stocks skyrocket. But what are your thoughts on the Sezzle capital raising? Leave your thoughts down in the comments below. If you've made it this far, give me some, let's go with the money emoji still. Give me some money, cash money emojis down there. I'll catch you guys later. Have a great rest of the week. Cheers.